What's good, and welcome back to Invest and Trade with Jax. Good early afternoon from Canada. Hope everybody's doing well. Gonna go over our friend Bitcoin. Happy Friday. Currently sitting at 19.5, up 4.4 on the day. Nice bear trap yesterday. Sitting market cap of 373 billion. 24-hour volume 45.06 billion. If you're new to BitGet, sign up and receive up to $8,000 in deposit bonuses. This is where I'm doing my trading. No VPN required for my US traders. Email me your sign up email. I'll give you free access to my Discord of over 2,000 members. Let's hop into the charts. So I mentioned yesterday, I said if you see an hourly close back above 18.6k, higher likelihood of a bear trap, and we push back to the upside, and that's what's happened here. So no reason to get too excited just yet. Yes, we've seen a bear trap, but we're still caught in this range here. So I definitely think there's high potential we push back up to 20.4k, but no reason to get too excited until we either break 20.4k or finally come down and break 18.6. But we are back above this red line here, which is the point of control, the POC on the volume indicator. And right now we've just come back up to about 19.5, broke above it a little bit, a lot of support and resistance in this area, and seen a little bit of rejection, which is healthy as we were overbought on our 1 hour indicators. So if we look at the DXY, looks like we may put in a smaller double top here. I was looking for a larger double top pattern, still a possibility, but we were making higher highs while making lower highs. We saw a little bit of a drop. So if we do begin to roll once again, we could create a double top pattern. And if that plays out, that's when you could see the DXY come down even more, all the way down here to about 111, and see Bitcoin continue to pump. But if the DXY does push all the way up to this resistance, as I've been mentioning here, watch for a bearish divergence on the daily, and the 1.618 is a normal retracement zone. I do have my Fibonacci pulled from this high back in March of 2020. And you can see we've come all the way up to the 1.618, which is a normal retracement zone. Many times you'll come up to the 1.618, you'll come back down to the 1.272, even all the way back down to the 1, and then see continuation. Either that or go through a steeper correction here. So we'll have to see how this plays out. Now for our, I wanted to show you guys this chart here. The first thing I want to show you guys is look at this incredible amount of volume, like nothing we've ever seen before with Bitcoin. And that can definitely suggest a breakout back to the upside. When you have a large upward curve in volume, that can definitely suggest you're on the verge of a massive breakout to the upside when you see such an incredible amount of volume coming into the market. And all of this has basically been coming in at these lows here at 20,000. We are creating a strong level of support. Hard for me to say that a bottom is in, but of course anything is, anything is possible. So potentially a wave count that we could be looking at from the previous bear market low is a wave 1 into a wave 2. This was a wave 3. And we're looking at a regular ABC correction, and then we push up in a wave 5, which would take you up to about 96k. However, if this wave count were to play out, once we reach that wave 5, then you would expect us to go through an ABC correction, which could be quite steep. So there is an alternative wave count that this was your wave, this was your wave 4 right here, and your wave 5 was complete, and you're looking at basically completion of a wave 1. And then this is a wave 2 pullback, and then you're going to push up in a huge wave 3 to the upside. Now what we can do here is take our fib retracement from the bottom of the wave 1 to the top of the wave 5. If this were to be a wave 2 pullback, we've only broken below the 0.382. We have not made it down to the 0.5, which is at 15.3k, and the 0.618 is at about 10.6, and a normal retracement zone is in between the 0.5 and the 0.786. So I don't think we're going to come down to 6k, but we haven't come down to 15.3 or 10.6. So unless it's a shallow wave 2, which is of course possible, the minimum target is the 0.382. What you could definitely look at here, if we take a fib retracement from the top of your wave 2, or sorry guys, from the bottom of your wave 2 up to the top of the wave 3, and then for a wave 4 pullback, let me take this fib out quickly. For a wave 4 pullback, you've met the target. The maximum top range is a 0.5, but the minimum target is a 0.236 to the 0.382. So potentially you could be looking. The only thing is, if this is a wave 4 and then we push up in a wave 5 to about 95, 100K, then that would be the completion of a wave 1, and that's when you could see a large wave 2 pullback, which would mean that this was only a short-term bear market, and then we're going to see a huge push up in a wave 5 and see potentially a much deeper bear market while we come down into a wave 2 pullback. Because if we take a fib retracement, let's say our wave 5 goes up to about 95K, and we take a fib retracement from the bottom of wave 1 all the way up to the top of the wave 5, because this would be the completion of a larger wave 1. Let's say it goes to 100K. Then your wave 2 pullback would take you all the way down in between 18 and about 6K, in between the 0.5 to 0.786. So I don't know if that's a likely scenario, due to the fact that this bear market has been going on basically since this high, in my opinion, since April of 2021, and we're now in October of 2022. So if we were to break out here and go into a wave 5, then you would definitely see a multi-year bear market to bring you down in a larger wave 2 pullback, where you'd be looking at a wave. Remember, this is just from the previous bear market, a wave 1 to the upside, and then a wave 2, and then pushing up in a wave 3. We'll have to see what happens here, but what I would prefer is that this was the completion of the wave 4. This was the wave 5 right here. So we've completed a larger wave 1 to the upside, and then you would see a wave 2 pullback that maybe ends here or comes down a little deeper to 15K to 10K, and then we get to push up in a massive wave 3. Because if that were to be the case, you could take a trend-based extension. Let's quickly redo this measurement here. I know it's a lot of squigglies. Hopefully all of this makes sense for all my Elliott wavers out there. So this is the bottom of the wave 1, and this would be the top of the wave 1. So just picture, actually, let me just number it. Let's see if we can number it. Okay, perfect. So this would be a 1 completed of a 5-wave move, and then this would be a wave 2 pullback, and then push up in a wave 3. We'll give a few targets. Let's say this is the bottom here at 19K. Take your trend-based extension from the bottom of wave 1 to the top of wave 1 to the bottom of wave 2. And let me make sure that this is correct here with the fibs. Log scale, perfect. So you'd be looking for a 1.618 extension for a wave 3, which would take Bitcoin up to 250,000. This is what I would prefer. And let's say that we come deeper. Let's say we come to 15K, and that's where we bottom out. Well, your 1.618 extension target would be all the way up at 209K. Let's say we come all the way down to the golden ratio for our wave 2 pullback at 10.6K, then your wave 3 target would be all the way up at 151K. So this is what I would prefer, is that a 5-wave move is complete, we pull back into a 2, and then we push up in a massive wave 3. Because if we're still looking to complete the wave 5 of a larger wave 1, let me open this up. Shit. Where this was all a wave 4 pullback, and we're looking to put in a wave 5 up to about, 95K, 100K, then you'd be looking at a much larger pullback into a 2. So hopefully what works out here is that this is the 5-wave move complete to the upside, and we've already pulled back into a wave 2, or we're going to come a little bit deeper into a wave 2. So then we can see a huge wave 3 to take you up to 150 to 250K. That's what I would prefer, but we'll have to see how it plays out here. We can invalidate this as a wave 4 pullback if we do come down and break the 0.5. So if we, one more time, I know this is getting a little bit drawn out, take our, let me remove this as well, take our fib retracement from the bottom of wave 2 up to the top of wave 3. So if we were to come down and lose 16.6K as support, that would invalidate that as a wave 4, and it would be guaranteed that the 5-wave move was complete, and now this is a wave 2 pullback, and then we can see that larger wave 3. That's what I would prefer. But of course, we are in the zone of a wave 2 pullback. Potentially this bottom could be a wave 2. It's just shallow. All right, gang, hopefully all of that made sense. Looking at our Elliott wave count here, still be coming down in an ending diagonal. I had to adjust the subwaves a little bit. So what you would be looking at, this was a 5-wave move into an A. We're now pushing up in a B, and then we come down in a C to break this low of about 17.5, potentially come down to this yellow box here, complete the ending diagonal, wave 5, and that would also signify a bottom being in for Bitcoin. Now the really bearish wave count, which is still valid here, is that we're looking to come down to 11 to 13K. And basically, we've come down in a wave 1 here in white. This is a wave 2 pullback. And now we're coming down in a 3. And within the wave 3 is 5 waves. So wave 1, wave 2 looking to come down in a wave 3. And within the wave 3 in blue, within those subwaves, you've made a 5-wave move down into a 1. And this is a wave 2 pullback, and then you start to come down in a 3. It can be invalidated if you were to come all the way up and break 20.4K. So that's the massive level, in my opinion. If 20.4K is broken, it can validate this wave count. It can also start to invalidate this wave count. And potentially you could be looking either at a rally, which I think is more likely that we're seeing a bear market rally, or the bottom is in for Bitcoin. As I've been mentioning, macro events don't really suggest that to me, but looking at the chart, which is the most important indicator, looking at this massive amount of volume that's stepping in at this range, there is definitely potential for a bottom being in, but I think the recession is going to get worse going into 2023, as I've keep mentioning in my videos. But of course, the market is the leading indicator, so I can give you no guarantees. Personally, I do think we could still come lower, and that's what I'm looking for, but I am preparing for a potential bottom just by DCAing into my positions. All right, guys, that's it for this one. Make sure to sign up to BitGet, up to $8,000 in bonuses. Make your deposit, email me your sign up email, and I will give you free access. Okay, so I just put in a poll here asking my Discord members if they think the bottom is in for Ethereum, with a thumbs up for bottom in and a sunglasses face for the bottom not being in. And so far 10 people think the bottom is not in, and only 4 think the bottom is in. So take that for what it is. I thought that was interesting. You can get free access. Email me your sign up email. Over 2,000 members posting chart patterns and talking all things crypto. And at the $10 membership, early access to my analysis as well as my trade signals, $10 a month. Sign up through the Patreon link, and I'll see you in the next video. All right, much love. Take care.